Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks for having me.
Tim, I'm hearing two opposing points of view right now. Some people believe as we pull out of the COVID crisis, we're going to see hyperinflation. Some people believe we're going to see deflation. What's your point of view, and why do you believe it?
Well, I'm staying in the deflationary camp solidly. You know, it's deflation that the Fed has been fighting. You know, that's what all this stimulus stuff is about, that we've seen, $6.4 trillion in the last 12 months, if my math is right and memory serves me right. I think I also stay in the camp that I think everything is going to peak together and go down together just like it did in 2000, 2008, and again in 2020. But, as I've also been saying, we have to have the structure in place, for a top to be able to have a foothold to turn. The situation with interest rates is telling us that this is a deflationary environment, and people are looking at that wrong, in my opinion. And the structure with some of the commodity-related indexes also telling us that the advances there are counter-trend, which I think that's being misread as well.
Do people say to you, how can you believe this? We have people from J.P. Morgan or from the Fed or the Bank of Canada saying, oh, inflation, that. Well, what's more, they want to promote it. That's why they have all this stimulus money. And on the other hand, they're saying, but we'll make sure it doesn't turn into hyperinflation. Are they reading all the signals wrong?
I think so. I look at things historically, and like you said, someone said, I forget the word, but I think you said Gerald Celente. What was the word you said what did he call it?
Gerald Celente from the Trends Journal in our interview for This Week in Money, which will go on the web on Saturday. He called it dragflation.
Yeah, and when we were talking before, it's a trans. I think what he's saying, not to put words in his mouth, but it's transitory. Yes, I mean, we've seen a tremendous bounce in a lot of the commodity-related, indexes and the commodities themselves. But I think I guess the word would be transitory. You know, I don't think it's real. I don't think it's long-lasting. And I look at relationships, statistics, and structure. And when we look at gold, for example, gold is weak. It's not confirming the move that we've seen in the overall commodity complex. And then if you look at like some of the gold related indexes, the HUI and the XAU, the structure there is telling us the same thing. Lumber, it's been on fire. Lumber has just been a rocket ship, man. But now it's showing signs of exhaustion. I'm not sure we're there yet, but it's trying. Crude oil, it's now trying to peak, and we, in fact, we have an intermediate term, a top in place. I think last week got an intermediate term sell signal in crude oil, and it's been weak this week. So it's trying. We're starting to see some signs it's trying to take hold. And then some of the leading indexes, stock related indexes and averages, and then even stocks themselves, are starting again to try to show some signs of something maybe trying to take place. But, this is all a process that has taken an enormous amount of time because it has been influenced by the manipulative efforts to keep expanding the government debt in order to keep the Ponzi scheme alive, keep it going. And so it's kind of like a cat and mouse game, if you will, between the natural forces of the market, which, by the way, have been trying to deflate, And that's what they're fighting. I mean, that's the whole point of the stimulus. That's the whole point of what they're doing. They're trying to combat that. And so, the natural forces of the market will exert their forces, in trying to roll. And then the Fed comes out, money masters, and they'll do their thing to try to hold it. And they'll kick the can down the road a little bit, as they say. Each time it takes more effort to do it, but then, the process, in the process, the bubble just gets bigger and bigger and bigger. And so, we have to work through that. And it's been going on for years, but it hasn't changed anything. And the fact remains, there's no bubble in history that hasn't come unraveled, and there's no amount of manipulation that hasn't ultimately failed. And we have both here. So, the very nature of what we're seeing here should tell us, or should tell anyone, that what the money masters are fighting is deflation. And it's, like I said, it's a process that, just has to, at some point, either the efforts are going to fail and Mother Nature is going to take hold, or, it's going to get away from them in some way. I don't know how it's going to look, but however it looks, when it happens, the structure will be there. It has to be. And whenever it happens, it's not going to be their fault. It's going to be something else. Just like in 2020, we had the COVID thing to blame. Everybody, they pointed their fingers to that. So there's going to be a so-called excuse or reason, but it's, what we're seeing here with this, talk of inflation at this juncture, I think, with this enormous bounce we've seen in commodities and equities, it's all smoke and mirrors. It's an illusion. It's not long lasting. The public has bought this inflationary thing, hook, line, and sinker, and just like always, the public's going to be left holding the bag and cry like babies once the bubble bursts.
I remember this time last year, so many people were crying. I lost 40% in the stock market with the major March correction. They said, why didn't anybody warn me? And I pointed out, well, Tim Cyclesman Wood, 2 weeks before the event happened, was saying, folks, this is going to tip over. If it was a ship, it's about to capsize. You have your life jacket on, go to cash, run for the hills. And how many people probably even emailed you saying, how can you say that? This thing's going to last forever.
They didn't pay any attention. This has gone on. Look, when we came out of the 2009 low, I made a statement that I didn't realize how profound the statement was. But I said, the longer the rally goes on, the more convincing it would become. And at this point, no one's listening to anything. I remember seeing neighbors almost in tears back in March saying, if it'll just come back, we're going to get out and we're going to put our money aside and we're going to secure our retirement and we're going to do this and now you hear the same people, people never learn their lesson. That's what I'm saying. And when you have people like myself and these other analysts and such that tell you these things, what we have seen, it's not a new paradigm. It is one hell of an abnormality that has gone on and on and on and on. And it's not excuses, it's a fact. Every time you get a little bit of a weakness, we have a stimulus package, or we have, the Fed something to keep it going. It's just like the freaking, the South Sea bubble. They're trying to keep expanding the debt and keep it going. And they can do this until either they lose control and the market checkmates them, or maybe they decide, hey, we got to back off. I don't know. But one thing for sure, like I said, I go back to this, just like the structure. The reason I was able to say that 2 weeks ahead of time, which I sent texts to friends at the time and made phone calls to them and told them. So the structure has to be there, and it will be. Now, also, just like then, I think it's going to fall in place quickly, Whenever it happens, it could be a week, or 6 months, or next year. I don't know when that's going to come, but it will happen. And then that's the opportunity that opens the gate for it to happen. And then the battle becomes between the forces of the market, and again, can they manage to come out and save it again? And I think that, from what I'm seeing, my bets are I'm betting on the side of the market at this point. I mean, if it ever cracks again, or when it cracks again, I just don't know that you're going to be able to hold this thing. It looks like the gig is just about up to me.
Well, there was that old saying, once bitten, twice shy. Well, obviously nobody's learned anything, so if once bitten, twice shy worked, all these people already have had their hands and feet gnawed off, and they're still going in to play with that dog.
Right, but see, look at it, in their defense, this, we had the, let's go back, let's look at this for what it is, we had the decline in 2000, which I have said all along, or into the 2002 low, the top in 2000, which when you look at a bunch of the historical data, you can clearly see that's where everything really tried, the natural organic top of the market and the economy tried to occur. And, they tried to bridge the gap and all that, and they pushed it and created the most extended at the time 4-year cycle events in history in the 2007 top. And then what happened? We had the worst financial crisis since the Great Depression. Their words, not mine. That's factual. And then coming out of that, what do they do? More and more and more of the same on steroids, and push it into the 2020 top. And now here we are again. We declined one more time into that. That was a shocker of a low. You look back at it on a chart, it's pretty swift. And then here we are again. And so people have been trained now numerous times over the years. Oh, the Fed's got this, it's fine. All the while it's blown up into this thinner and thinner and thinner bubble. When I say thinner bubble, I mean the skin of the bubble is getting mighty thin, and it's taking more and more effort each time to sustain this thing. Can they do it again? I don't know. But again, it's that structure we're watching for. And what I'm saying is, I think the big misconception here with this inflationary talk is people are reading that like they can sustain this, like we are in some sort of recovery mode. And what I'm saying is they're misreading the signs because they don't understand these cyclical relationships as stretched as they are, and they don't understand the statistics as stretched as they are. And it's, I think that's, when I say illusion, that's the illusionary part of it. And again, I don't know how long it's going to go until we get the structure. And I think just like with all major tops, it falls into place quickly.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see happening with real estate? Is this following the same kind of trend as the stock markets, where everything's just going higher and higher, and you can't really fathom why?
Yes, I do. I stick to the story that it's all moving together, and this reminds me, it's worse than the 2000. In my mind, the 2005, 6, 7 top in equities. I think it was in 2005 or maybe 2006. I saw one of the. I'm not looking at the chart, and I don't remember when it was now exactly. I think it was late. I think it was sometime in 05. I remember I was on a board, and there was a development, and I told the builder, I said, housing has, it's peaked. I saw it. And I called that on the air with another interviewer at the time that I was doing shows with. And I told this builder that it had peaked. And he asked me, he said, in a smart aleck kind of way, he said, well, what the hell do you know about real estate? I said, nothing, but I can read a chart. And sure enough, they abandoned that project before it was over with. So, again, it goes back to, I hate to beat the dead horse, but if you understand the statistics and the structure and some history and historical relationships and some things like that, it does all make sense, and you can put it in perspective and see what's happening. But to your point, I digressed on that but to your point, I see the same thing here again. The housing prices are insane, in my area. The building is insane. You can't, there's a shortage of supplies. You go to the store, or, I hear the stories. I mean, I haven't gone, but, to get cabinetry or shingles, people, after the hurricane, people were waiting. There was a shortage of shingles. There's a shortage of everything. And the building, it's not just the repairs, but it's the building. And so, no, I think it's going to be the exact same thing. There's a bubble in literally everything, and housing included.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, if deflation is going to be the term that we might be using, or dragflation, is there any protection against deflation to make sure you hold on to your wealth?
I don't have, people ask me that question, and I know others that are in the same camp with me, and I don't have an answer, per se, and I'm certainly not giving advice here, but to me, in a deflationary environment, the only safe haven, and this is contrary to what everybody else is going to say too, I'm sure, the dollar. And I do see the hyperinflationary side of this. I do. I get it. I know but the deflationary side, we have to have that deflationary spiral before we get to that inflationary point. And, looking at the cyclical work, I have an idea when that's going to be as well. But I guess the answer to your question is, contrary to popular belief, the dollar. I mean, in a deflationary environment, the dollar is going to be worth a whole lot more. And an example of that, people say, well, yeah, but the dollar's devaluated so many cents a dollar since, 1920. I get all that. I understand. What I'm saying is, as an example, in 2008, 2009, into 2010, I remember $1 million pieces of property, because I looked at one of them that went to auction for $250,000 in this area because of the bubble. That's a fact. And I remember seeing boats on the side of the road for sale. I bought a boat that a guy had to unload. I've seen this. I know. And so your dollar, that in a deflationary environment, that's what that was. That's the best. I don't know. I don't know of any place better to be. People talk about trusting the banks and that sort of thing. That's another story. I don't have that answer. What do you do with your money? You dig a hole, put it in your backyard, or you leave it in the bank and hope for the best. So I do think in a deflationary environment, the dollar is going to be king. And then, once we work through that process, that's another chapter in the book. But then I do see the hyperinflationary side. But again, that's later.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.